Hi, I'm Hannes Viljoen, manager of the Specialist Securities team here at the JSE. And today I quickly want to introduce our big institutions to our product, our solution to bringing OTC or over-the-counter products on exchange. Now, financial derivatives products did really play a big role in the financial crisis of 2008. There's various reasons for this. I just want to highlight three of the big reasons. Number one probably is valuations of structured products. A bank or institution would go to a rating agency. A specific rating agency would apply a rating to a product. A lot of the time a AAA rating, which means that this product really has got zero or no risk. At the end of the day, and if you have a proper look at the products, these products actually did not have a AAA rating. It really did have big risk involved in the product. And thus, when underlying economic circumstances moved, both the buyer and the seller to the specific product lost money. Secondly, there was a big lack of transparency. What really happened is banks and institutions sold products to clients. The clients did not really understand the inherent risks of the underlying product and how the product would react to certain economic circumstances. Once again, the economy and the circumstance moved against them, and both parties lost money. The last and probably the most important thing was credit risk. Once again, a bank or institution sold a product to a specific client. The client couldn't pay, or the bank couldn't pay at the end of the day, and both parties were burned and lost money. Now, in mid-2006, the JSE realized that people were looking for the advantages of OTC products and the advantages of on-exchange traded product really as one product. And thus, the JSE launched Can-Do Options and Futures. The whole idea of this product was to bring on-exchange products and OTC products together and combine the advantages. Now, three big advantages of on-exchange listed products really counteracts the problems that the OTC market has. One is the independent third-party evaluator. The exchange will always value the product at the middle of the double. It will never slant towards the buy or the sell side and will be a fair value calculator. There's always big transparency. Whenever you trade a product through the Can-Do platform, the JSE will issue contract specs that specifically mention how this product is valued, how variation margin is determined on a daily basis, and how expiry takes place at the end of the life of the product. And then lastly, credit wash. The JSE is always the buyer to every seller and the seller to every buyer. Should a bank, for the sake of the argument, go bankrupt and it is not able to pay the client at the end of the day, the JSE and the clearing members will stand good for the bank. Let's take Lehman Brothers, for example. Lehman Brothers was a very big client of the JSE. On the day that Lehman Brothers went bankrupt, there was big panic in the market. However, within 48 hours, the Lehman Brothers book was moved over to their counterparty, and neither part of the transaction lost any money. And then lastly, OTC products has always been flexible. Exchange-traded products has been standardized products, standardized expiry dates, and standardized underlyings. OTC products brings flexibility to the market. With Can-Do's options and futures, you can really choose what the underlying of the product is, what the exercise period is, what the expiration date is. You can really do whatever you want and construct this into a product. Now, Can-Do started out very simply by just a pure flexing of the date of the product. We took a simple product like the Top 40 Index and we introduced multiple expiry dates, whichever suited the needs of the specific client. From there, we moved on to customized basket and indices. Clients bundled all kinds of shares together and asked us to value them and list them and make them tradable for them on a daily basis, as we did. After that, semi-exotic options came to the market. We valued and traded barrier options, digital options, variance futures, and variance swaps. And then at the end of the day, what we are currently busy with is your exotic options and futures. We have traded quite a bit of these. Cliquets, ratchet, look-back put spreads, We are currently working on range accrual options and futures as well. For these exotic options, the JSE also won an award at the Futures and Options World Awards in 2008 for the best new product of the year. Now, how does a Can-Do get listed? What is the process? How does it happen? Well, there's usually one of two pre-listing procedures. The JSE and a counterparty would get together. The counterparty and the JSE will work on a specific product. Once the JSE is sure that we can value and risk manage this product, the counterparty usually goes out and off-sell this product to his different clients. Or two people, say a bank and an institution, would get together. They would agree upon a product and the terms and conditions. They will then come to us, and if we can value and list the product, we will go ahead and do so. Now, what is the procedures? Bank ABC and the clients get together. They decide they want to list the product. They approach the Can-Do team with the deal. The Can-Do team will set up contract specifications. They will have a look at valuation. They will have a look at margining and put everything together in one pack. That again goes out to the two specific clients again. Once they are happy with their contract specs, we will send them off to the clearing members. Once the clearing members are happy that they will be able to risk manage this product on a daily basis, we will go ahead and list the product. Now, how does the risk management process work? Well, it works exactly as each and every single stock future that trades on the JSE on a daily basis. Initial margin is predetermined. 3.5 standard deviations initial margin is asked for, and that covers about 99.9% of any daily loss over the specific period. There's also daily variation margin. Even with the highly exotic products, we value them on a daily basis. Daily variation margin gets paid over from the loser to the winner. And then, of course, Can-Do's has the separate function that you can determine what the expiry valuation method is. Should it be a very big deal with a very big delta, and you want to get rid of it over a 5-day period, we can help you with that. So what's next for Can-Do's? Well, we are looking at really flexing the underlying of the product at this stage, as we have really done most of the exotics that we can think of. Currency options will definitely come on board the Can-Do platform with exotics, and we are currently looking at barrier Can-Do's for currencies. Also, yield-based futures and options in the exotic space is really on the forefront. Range accrual options and futures will pretty soon trade on the JSE. And then also commodity options and futures. Barriers on oil, on platinum, on gold, etc., they will definitely come to the market. We have not yet came across any exotic option or future that we are not able to value. And we have agreed with the clearing members that if we can value a specific product and that the clearing members are happy to risk manage on a daily basis, we will go ahead and list the product. If you want any more information on this, please do not hesitate to call the Can-Do team at candos@jse.co.za. Thank you.